Hello and welcome to Real You. I want to share something with you guys that I see in conversation all the time about fractional reserve banking. The biggest thing where I've heard this and I've seen this is people talking about it like in social media. And it's people like wealthy people, they'll be like, yeah, when things really changed for me, I learned about fractional reserve banking and this. So it's piqued my interest. I wanted to learn about these things, know what they are and how they work. And so I've been studying them and want to share them with all of you. So, fractional reserve banking. Now, this has to do with the banking industry and how they operate their business and their banks. So, what it is it's a system of banking under which banks that take a deposit from the public are required to hold a portion of their deposit liabilities in liquid assets as a reserve. So, this is what it means. The Federal Reserve requires banks and other depository institutions to hold a minimum level of reserves against their liabilities. Currently, the marginal reserve requirements equals 10% of a bank's demand and checking deposits. So, let me give you an example of that. If a person goes into the bank and deposits $1,000, the bank must take 10% of that and hold in reserves, which is $100. They can take the other 90% and lend that out. So that is $900. How do banks operate? They operate on car loans, mortgages, credit cards. Any type of loans that they can give out is a big way that they operate. So then let's say somebody comes in and deposits $1,000. Now they got $900. The next person comes in the door, and let's say they need a loan for their business of $900, using the example. So they loan out that $900 to that person for business. They go out and they buy whatever it is that they needed for their business. Let's say they spend that $900 on marketing. They pay some person $900 for marketing. Then that person that just got the $900 goes in and deposits that money into the bank. Now the bank gets that $900. They got to hold 10% of that. So they take out 90 and they're able to loan out another $810 to the next person coming in the door. Well, you guys, this is happening on a large scale. Everybody coming in and depositing money. Now it's just happening. You don't even have to walk in the bank. It's just auto deposit or transfers, Venmo, and all these different things, right? So there's billions of dollars in transaction. Well, a lot of the banks are the ones making these transactions. Therefore, it's giving them the ability for a lot of fractional reserve banking. Every time money comes in, they lend it out. They get rid of it as fast as they can because that's how they earn money. So I want you to think about right now what's going on. A lot of banks are offering really good rates on CDs, which are certificates of deposits, and money market accounts. I seen a bank, my local bank, actually, it's credit union that I use. They're offering 4% on their money market accounts right now. That's way better than it was just a couple of years ago, like way better. So why did they do that? Well, because there's this such thing called a recession going on. And so banks are like, hey, we operate on money. We need money. More money coming in the door gives us the ability to create and operate more business, right? So they're offering these to incentivize people to bring money into the door. Now, every time you go make that deposit, fractional reserve banking kicks into play. They're able to loan it out and it keeps their business and their wheelhouse running. All right. One hard part though is, I mean, if you're getting 4%, inflation is higher than 4%. So, yeah, 4% is way better than it was before, but think about inflation. So you got to look at those things. So, next I want to talk about a strong economy. What makes a strong economy? If fractional reserve banking is dependent on everybody coming in and making deposits, I want you to think about the next thing. Let's say every person in America had $1,000 in the bank, right? Or like on your app, you log into your bank and it says you have $1,000 in your checking account. Do you really have $1,000 in that checking account? No, it's just a digital number that's showing up there. What if every single person went into that bank and requested that $1,000? I mean, it would shut the bank down in a day because for one, they wouldn't have that much money on in hand because they only have so much. So if everybody, I mean, even 100,000 people went in and requested 1,000, heck, even probably 100 people, like your local bank probably couldn't even give 100 people $1,000. They don't have that much money in cash. So there's a lot to learn there. Now, what makes a strong economy? A strong economy is based on money in flow. You're going to see this word right here, flow. What that means is transactions. So it's happening everywhere. Transactions are happening everywhere. So think of 2020, 2021, 2022, and even before those years, we had a really strong economy, right? Like everybody was buying things, spending money, investing. There was a lot of things, a lot of growth happening in America. And I'm specifically talking of America here. There's a lot of things happening. I can think of so many businesses that started, real estate deals, everybody buying new vehicles, everybody buying campers and toys and going on vacations, and when you could go on a vacation, right? Like there was a ton of money in flow and in transaction. Therefore, things were happening. Like everybody was hiring. People couldn't hire quick enough. And it all stemmed from that flow, that transaction. Well, what happened? The media started talking about a recession coming. They started talking, well, this ain't going to last forever. Eventually it's going to fall, right? So it did. We've hit a recession. Well, why? Have you ever really thought like what causes that recession? Think of 2007 and 8, 2009, 2006, like that really the housing crash. You guys, what caused those things? Money stopped flowing. Everything stopped flowing. So literally our country, our banking system, our money system depends on flow. That's I tell people all the time, I'm like, man, if we could get money back in flow, this recession and the struggle that's going on would be gone in an instant because things would start flowing again. Well, I mean, there's pros and cons to everything, right? Inflation's crazy, supply and demand, like there's so many things that go into effect and play on all these things. But gives you an idea of fractional reserve banking, how banks operate, what's going on, what causes a strong economy, why banks are offering these interest rates that they are now for you to deposit money. Because think about it, then they're going to take that money you deposit and loan it out 7, 8, 9% for vehicle loans, home loans, mortgages, personal loans, credit cards. Like it, they're giving you 4, but they're getting 7, 8, 9, 10, 12, 20%, depending on what the loan is for, right? So that's what makes it strong.